Hello folks, once again welcome back to my channel. It's been quite some few days that I've posted, so I want to officially welcome you. If you are new to this channel, officially I'm going to welcome you to our channel. And then if you are one of our old folks here, you're once again also welcome. So if you are new to the channel, I would urge that you subscribe and then always give me a thumbs up, a like for me to have the fair view that you like my work, and then I should keep on doing more. Okay, so I'd encourage that you always give me a thumbs up, just give me a like for me to be encouraged to record more. All right, so quickly today we'll go to today's video. We are looking at volatility 75. This is a quick review and a quick update on volatility 75. So if you are a subscriber to the channel today, you'll notice that I went live in the morning um, to show you some live trades that you could have taken at the moment. And I want to quickly go through and then also give you a more update on what is still transpiring on the market and what we should expect. All right, so quickly, let's look at the volatility 75 on the monthly time frame. Um, so on the monthly time frame, this is what we are seeing on volatility 75. Okay, so on the monthly, we could see the fair value gap resting above here, and then with the fair value gap resting above this side, price just traded into the mean threshold of the fair value gap on the monthly, and then it got bounced back. Okay, so this is a consequent encroachment into the mean threshold, and then price got bounced back. And then we want to delve deeper into what price is actually doing at this point on the market. All right, okay, so let's go quickly to so what we are basically expecting is that we know that on the monthly, or when we have a fair value gap, we should necessarily expect price to close in on the fair value gap because it has liquidity resting in here. And then what it means is that this is a sell side imbalance and then a buy side inefficiency. Okay, so we just sold and then it didn't have any form of buying. All right, so it's a sell side imbalance and then buying side is inefficient. So price must efficiently deliver to the upside to have the market balance. So anytime there's an efficient market, it means that the market, there was equal amount of selling and equal amount of buying. All right, so we need to have always in mind that the market must efficiently meet this criterion. All right, now let's look at the market on the weekly time frame to see what is transpiring. So inside the monthly fair value gap, we saw that price traded briefly into it and got bounced back, and we've all seen what price is doing in this area. Okay, so we could see that we have a lot of accumulation happening inside this area, a lot of accumulation happening inside this area. All right, so my premise was that as this short-term low here has been swept, and then this short-term highs resting in here has also been swept to the upside. All right, so let me quickly show you. uh, so this low here was a short-term low. It has been swept to the downside, so sell side liquidity taken. And then when you look at the buy side liquidity, which was also resting in here, there was some equal lows resting in here above here. It has also been swept to the upside. Okay, now beside what we are seeing, that we are seeing accumulation, sweeping of highs and lows. All right, so I think I have a video in my gallery. You can go back and check. um it's about highs, liquidity pools, highs and lows. Okay, how market sweeps liquidity on the upside and then liquidity resting on the lower side. So basically, one thing that you should understand is that the market trades based on liquidity. The market is not moved by some form of animal patterns and some sort of how do we describe it? You rule lines thinking that is a trend line and price should hit a line. And one thing you should understand is that institutions, big institutions, are not going to put their monies into such um, animal patterns. Okay, one thing you should understand is that big institutions, they won't play with their money at the mercy of animal patterns that is whatever. And no, they understand liquidity, they understand financial aspect of the market. All right, that market is looking for liquidity. Okay, how quickly it can convert its assets into cash. All right, so now let's continue. So we've seen the sweeping on the highs and the lows. All right, and then we could still see that although we have this area, we could still see the market had an area of fair value gap resting in here, another fair value gap resting in here. All right, which we'll look at later. Now, so you could see that it has taken some highs and lows. What's next? So on the weekly time frame, when we are analyzing, we've seen that highs and lows have been taken, and then we can't see any fair value gap resting inside this area. So we'll probably have to look at what the market probably could do next. Now let's look at it on the daily time frame. Okay, let me switch to this chart and go to the daily time frame for you. So I did a lot of annotations on the chart. Okay, so now let's look at market on the daily time frame. Beautifully on the daily time frame, apart from this bigger fair value gap resting in here, we have another fair value gap resting inside this area. And you could see that when market swept the highs resting above here, all the market did was that it traded straight into the fair value gap. So look at where price traded into. It traded into the fair value gap, closed in, and then it's rejected and it traded down. All right. Now let's look at another one. So we could see that there's some fair value gap up here which was not fulfilled. Price has fulfilled it. Now come down. When you come down, what you could see is that inside this area of trade, the current area too, you could see that there was some fair value gap in here that price had already traded into, and price has traded into it again. So it more of inverted. All right, another fair value gap resting below here, price traded into it, and then price has traded into it severally. Okay, and we could see that price is lingering around this area now. So beautiful, one of the things that I can show you here is this. Let's look at this fair value gap. Okay, that price has already traded into, and then price has traded back into it again. Okay, so this what my mentor call inverted fair value gaps. All right, now let's look at it on the smaller time frame and see what is transpiring on this particular fair value gap in here. So the last time I showed you that, so for instance, we had all this sell side liquidity resting in here, and then market swept. So we had this low, this low. Okay, so let me quickly draw this line for you to see this. Can you see the sell side liquidity? Good. Sorry. All right. So beautifully, we had this sell side liquidity and then this other sell side liquidity. Price traded into swept this sell side and then it dipped into this one, and then we had a turtle soup set up. So price had to rally away from this area. So now, beautiful, what I'm seeing on this particular area is AMD pattern, which is the power of three. So price had to accumulate, manipulate, and then redistribute. Okay. So in the course of the redistribution, now we have price trading back into what's the name? an area of interest or trading back into an order block before it rallies back up. So notice this. So today I decided to place a trade. For those of you who place the trade, let me go down to the 4-hour time frame. So for those of you who entered the trade, price actually rallied a little bit up into this area, and those in my inner group, I asked them to close their trades here. Yes, for a reason, So I don't have to advertise and tell you that you have to join my inner group. No, I don't need to. I don't need to let you know that I bring a few people on board. All right, so they took profit somewhere just on this high, and that was it. So are you saying that am I expecting price to now break this low, trade into this area? Yes, yes. So what my expectation is that although in this fair value inverted fair value gap that price is traded, see how price has respected the body of the candle, has respected the fair value gap. Look at this area, how the body of the candles respected the fair value gap. Okay, yes, price can go a little bit up, take some liquidity resting in here, but ultimately I'm expecting price to. All right, so you could see how the bodies of the candles are respecting um, the fair value gap, the inverted fair value gap. You see, so on the 4-hour time frame, it is possible price would quickly reverse, trade, take down some liquidity resting in here. That is the fair value gap resting in here, the high in here. All right. Now let's go down to smaller time frame so that we have a more broader view. So why someone ask, why am I expecting that price should trade down into this other fair value gap again? Let's go down to back to on the daily time frame. It is an inverted um, fair value gap, not because it is an inverted fair value gap. That is why I'm expecting price to do that. But watch this. When price traded into this area, to sweep the liquidity, okay, we have this price trading to sweep the low. This particular price action here is an order block. It is a bullish order block. So watch this. When price traded up and traded back into it, they all traded into the main threshold of the order block. That's the middle of that particular order block. Is every order block what makes an order block a valid one? So for instance, with this, in this scenario, the reason why we consider this particular candle or this particular block here as a valid one is it has swept a low. It was used to sweep a low. Okay, so we would consider it as a valid order block. All right. So now watch this. Price retraded into the main threshold of that order block, and then it traded up into this area and then trades back. So watch this. So watch this. As price has retraded back into this area, now this area or this particular candle here also forms another form of order block. Okay, this particular candle here forms another order block. An order block which has traded into another order block, and then it pushes price further. And watch this. And this one also trades into this particular candle order block here. So now the third one my mentor refers to as propulsion block. Okay, so it propels price. So you notice what, when this one traded here, you notice that any price that traded into this particular order block, that was what quickly rallied price away to sweep the highs resting in here. So this is the propulsion block. Okay, so however it is, if should price trade back into this block or into this area of interest, we're expecting price to rally back up. Okay, so it is the same with the power of three. We have some consolidation or we have some accumulation, price manipulates and then it rallies back up. It's as simple as that. Now, as it rallies back up, it has to come. We are currently at a discount price, so price has to come down, uh, trade from another block, and then go up into the sky. All right. So beautifully, that is what is happening on volatility 75. So you could see on the 4-hour time frame how price is respecting the old fair value gap. Let's go down to 1-hour time frame and look at what is happening. Price traded into this fair value gap, and then we could see all these price actions. Okay, so now let's look at it on the 15 minutes time frame. You could see how price is still, lingering around the inside the fair value gap. All right, this is where the mean threshold of the fair value gap, you could see where price currently is, and then we are hoping that uh should price continue trading down. So if it trades down into this area, when necessarily do you think price would reverse? And it is too obvious and it's too clear that, watch this, we have this particular continuous order block here. We have a small fair value gap resting in here. Price can necessarily trade into this fair value gap and then rally back up. Your stop is just below this low, and then it's a beautiful trade to even take. All right. So that is what is transpiring on volatility 75. So for today's trade, those who took the trade, I actually when the price got here and traded up all the way into this area, I told them to close the trade inside this area. Others say they still have the trade running. You can still hold it, but I don't think you will be able to bear when price should do anything on the downside. So I'm expecting price, should price trade a little bit above this high, you can exit the trade, but I'm not expecting price to, because should price trade above this high, then it means that we have we have a low, a high, a lower low, which is a normal trade for a bearish market. But if we have a high, a low, and then we have a higher high, it means that the market has shifted. So we expect price to we expect to get more premium prices. But currently, we are still looking for more discount prices before we rally up into the sky. Okay, so that is what is happening on volatility 75. So quickly, I'll pause for volatility 75, and then I'll come back for volatility 100 and then 50 IS, 1S. Okay, so if you are new to the channel, please do well and subscribe. I wish you all the best in your trading. Enjoy the rest of your day. Have the best of your trading day. So what is happening? A quick information for you guys. I am organizing a new trading classes for new traders. If you're a beginner, you have never traded before, this is an opportunity for you to also enjoy, to learn from the scratch. For some of you who don't understand the strategies, the principle that I'm teaching here, because all you've been taught is you have to draw lines, you have to use indicators, you have to use robots, you have to use moving averages, the plenty indicators. No, we don't deal with any indicators. So if you want to really understand it from the scratch, I will put the link to the page below so you can join it and then enjoy the lessons. So the beginning of the lessons will be communicated on the page. All right. So I wish you all the best in your trading. Enjoy the rest of your evening.